This is the Collecting Real Estate Podcast. I'm your host, Stephen Purse, here with your co-host, Bill Hamill.
I'm so much more comfortable collecting real estate than I am collecting other stuff.
This is the Collecting Real Estate Podcast. My name is Stephen Purse. I'm here with Bill
Good
Hamill.
morning,
Bill.
Stephen. What a fantastic guest we had on today.
Yeah, I don't want to pick favorites, but that was a great interview. I've been following Nico on social media for a while now. Just be able to talk to him on a podcast. It was really great.
Nico is the man. I've been following, I follow probably 5 or 6 podcasts, but I do not miss an episode of Nico's Small Axe podcast. He delivers every time with great guests. I see all his social media. So, I'm watching how he goes along very closely, and I can't wait to just watch him have major success.
Yeah, everything he said was so impressive. There was one point later in the episode where I was so impressed, I was left speechless. I was kind of looking at you like, I hope you have something to say, because I'm just still trying to digest everything that he just
Fortunately,
said.
when I was preparing last night for this podcast, it wasn't hard to come up with an add-on question.
Yeah, so it was a great episode, and I think everyone will enjoy it and find some value in it.
Awesome, thanks.
Very excited to have Nico Salgado here this morning on the Collecting Real Estate Podcast. Thank you for being here, Nico. Can you tell us a little about your real estate background and history?
Hey, Stephen. Yeah, thanks for having me, man. So, real estate background, probably we could say I began in 2012 with the single family development project in Nicaragua. That's really where I got everything started. And from there, moved on to larger multifamily. By 2020 was my first large multifamily acquisition. I did it as a co-sponsorship. So I was a co-sponsor on a 194 unit project in Columbus, Ohio, and currently doing my second one just about a year later, in now 2021, we're in October, another co-sponsor position in Louisville. This is a 104 unit complex, 2019 build. A little different beast than what I did before a year ago. Actually, completely different, but just excited to be able to do
That's
something.
awesome. So you went from doing one family development in Nicaragua, which is fair to say a third world country, to now you're doing GP deals on 100 plus units, one in Columbus, one in Louisville. Very impressive. Can you tell us your role on the 194 unit and how that deal's going till now?
Absolutely. So I jumped in that deal a little late. They bought the deal in August of 2020, and I didn't come in until November of 2020 to help finish up their capital raise and take on the role of marketing and investor relations. So I sit in on all the asset management calls, and we're still doing one a week because it's a heavy lift, that one. Typically you don't want to be doing one call a week, but that's what we're working on. So I sit in on all those calls, and I handle all the marketing material as well as the monthly newsletters that we punch out and the monthly updates that we punch out to our investors. I also take phone calls from investors and update investors with video and just other communications that way. So as far as the asset management is concerned, I'm not taking any cut of the asset management, but I'm sitting in, listening, and communicating and providing input on asset management. It's really been a learning experience for me, and that's how I'm taking it. It's my first big project, so for me to go in and say I'm going to be asset manager would have been, I guess, a disservice to our investors, and I didn't want to do that. So, they invited me in to do any position I wanted, but I said, let me sit in as an asset manager. I'm not going to collect fees. I'm not going to be called an asset manager. I will be called Mr. Marketing and Investor Relations. And that's basically how it's been. So how has it been going? Well, we took over this property with 194 units, 2 separate locations in Columbus, Ohio, with 12 years of deferred maintenance. The previous owners haven't touched or done anything for the prior 12 years before we picked it up. And luckily, one of our general partners, well, 2 of them, they have a construction crew down in Florida, and that's mainly where they operate in the Southeast. But they really found this property and found a great deal. So what they did was they took their entire construction team, shipped them up there, and they lived there for 3 to 4 months while they turned about 70 units in that time. So it was a real heavy lift. And we went from, we got occupancy down to like 60 something percent. I think we were at 62 or 61% at one point, and it was terrifying, and from there we've been slowly eking back up, and now we're at 88, 89% occupancy almost a year later.
194 units is extremely impressive. How did you find this deal, and how did you become a part of the syndication?
Yeah, good question. So Abiel and Renee, those are the guys who found the deal. They find deals like this off market, and then they negotiate like beasts. They got they got the price down to $43,000 a door. Now, as soon as what happened was they offered cash. That's why we got it for such a low price, and we didn't. There was like no due diligence period. Within 2 weeks, they closed with cash, $8 million, boom, on the table, take it, and we ran away with this $43,000 a door. Now we still haven't put debt on it. We've been using the same private money guy this entire time, and it's a high interest rate, so we're at 9% interest rate right now, which is kind of challenging for us, but I'll talk about that later because we're going to come out in the end winning anyway. But so we came in with cash within 2 weeks closed. This was in August of 2020. And then we syndicated it afterwards. So that's when I was brought in after to help with the syndication, because nobody on the team has done a syndication before, including myself. So it was like all hands on deck. We did 2 webinars for that. And I ran one of the webinars to try to get my feet wet in that and get experience doing that. And we ended up closing in November of 2021, meaning we raised enough capital, that all the capital we needed. We still have more time to raise capital, but we raised all that we needed, and including our private money loan, our private money lender invested $1.7 million in the deal because he believed in it so much. So we got it to $43K a door, right? That's what we acquired it at. And then about a month later, some other buyers hit us up and saying, hey, how did you guys get this for so cheap? We've been offering 50, 60 a door, and they've been turning us down. I guess it was the fact that we were a quick close with cash right away, and that was it. So we were offered right away, a good amount of money to sell, but we didn't sell. We know that in the long run, this is going to be worth a lot more than what we paid for it. Not without headaches, though, obviously. I mean, 194 units, turning 70 units in 3.5, 4 months is just insane.
Yeah, there's a lot going on here, a lot that we and the listeners can learn about. Not only a heavy lift can take some time, specifically when you have 12 years deferred maintenance and closing cash as you're repositioning. So what is your plan after you're repositioned? Do you plan on going to a specific type of debt? And when do you expect it to be repositioned?
We had projected year one returns to be at 2%, and we're missing that. We're not making that 2% because we still have that 9% private loan. Now, so we were cash flow negative. I think now we're finally cash flow positive. But that being said, the plan was within 6 months of taking it over to secure agency debt, which we hadn't been able to do, obviously, because we dropped down to 60% occupancy, and now we're back up to finally now 88 and 89%. Last I checked it last week, it was 88%. Maybe it's a little higher now. And everything's going well now, right? So we've been in talks with our lender to get agency debt on this, by the end of this year, by the end of 2021. But we were approached by a couple of buyers with, really, really nice, offers, and we decided to take it to market. So instead of going the agency loan route, we're not even going to bother at this point. We have a marketing package that was just finished. We just got an LOI on Friday. Today is Monday. We got an LOI submitted, which we're most likely not going to take, but it's a good starting point. They're offering 67 plus a door when we paid 43 a door. So if you look at that, I mean, if we can get a little over 70 a door, we're going to be getting a 1.9 equity multiple to our investors and a huge IRR. I don't even know what that would calculate out to be within 1 year time. So Luckily, we're also considering just passing that 1 year mark to avoid the short-term capital gains for our investors. Obviously, there's still going to be capital gains, but it'll be long-term capital gains if we can pass that 1 year mark in November. And it seems like that's what's going to happen at this point, because it's already October, getting to mid-October. So there's no way we're going to sell it prior to mid-November. So I think we're good with that. And that was a consideration also because we were offered 60 something a door, maybe 63 a door back in the springtime, and we turned it down just because of this reason, the short-term capital gains tax and the implications it would
Wow,
have
what a
on our
breath of
investors.
fresh air, since you guys have been on a long journey, your ups and downs with vacancy and a heavy lift. The beauty of this most recent real estate cycle, have you seen, based on the real estate upswing, organic appreciation in addition to the repositioning you've done to be able to get you to this point?
So yes and no, right? When we purchased this property in November of 2020, a broker told us we should be, we could list it today and get 70,000 a door for it. Now that doesn't mean that we could have listed it in that shape, right? It should have. I'm sure he was referring to it being, fully repositioned, or at least having a good amount of the units turned to show what's possible with the property. But in that area, things are trading for about 70 a door in that area based on a remodeled property, right? So that's really what we were going for. So now we're at that level, and we're hoping to get 70 or a little bit more per door. Now, back to your question, have we seen organic growth? Absolutely. I mean, you're seeing the Columbus market just explode, and I don't know personally how long that can last for, but people are definitely willing to pay upwards of 70 a door, whereas, in the past, or a year or so ago, it was maybe 50, 60 a door. But in the neighborhood that we're at, 70 a door. Now we're hoping maybe we can get a little bit more, 72, 73 a door. So yes, there is some organic growth, but obviously we needed to reposition this property to even consider that growth.
I'm really impressed by the scale of the deal. There's so many 2, 3 family investors, but this is such a different game getting to that level. Nico, you have one of my favorite social media accounts across all platforms, and you have a really good podcast, the Small Acts Communities podcast. I'm wondering how that success in the media world has translated to success in the real estate world.
Oh man, great question. It has and it hasn't. Okay, so this is my third. So that opportunity came to me because I was friends with people in the Jake and Gino community. We had been looking at deals together in Florida, and they invited me on that deal in Columbus, which was not my target market. There were friends of mine that invited me on the deal thinking that I had such a great social media presence back then that it would have been beneficial and maybe would have helped with the capital raise, but it didn't necessarily. I didn't completely fail on that, as bringing capital. I brought $250K, right? Which for my first raise, for me, I guess it was, you can consider it successful. They were happy with it, but I personally was a little upset. I wish I could have brought more, right? A few months after that, I was approached by somebody that I had on my podcast to see if I would want to co-sponsor with him on a deal, because of the fact that he saw me as a social media guru as well, right? And I surveyed my audience at that time, and I wasn't able to come up with enough capital for it. It was a 506C, meaning I would have only been able to tap into my accredited investor base, which was very slim at that point. So I declined, but it showed the power of what I'm doing, but putting myself out there, and people are reaching out to me. And then this latest opportunity in Louisville also comes from my connection with somebody that was on my podcast, John Kasman and Mandy McAllister, both on my podcast. And, they see me as this social media guy, and I'm realizing the power of social media and the podcast and the meetup groups and everything that I'm doing online and showing everything that I'm doing. But if I'm not able to back that up with results, then really what's the use? And I found out this time around, doing this capital raise, this is another 506C, that my accredited investor base is only at 35 people. And to convert, let's say 5% of that, which would be good, is not going to be enough to get into the deal or really make a significant mark on this deal as a capital raiser, right? And this deal also, I'm going to be doing marketing and investor relations, and I'm also going to be sitting in on the asset management calls, which I'm really excited about because this team, if we talk about this deal, also is phenomenal, and I would love to do that, and I would love that experience. But so yeah, I've been able to get into these deals as a co-sponsor because people see me as a thought leader. People see me as somebody that is prominent in the industry, that is out there doing things, being active as an active investor. Now, where I'm lacking is the ability to actually bring together investors to invest in these deals, because the majority of my investor database comes from active investors. I'm involved with the Jake and Gino community, the Make It Happen Mastermind, and the majority of these people want to be active. Whether it's they'll still invest passively, but eventually their goal is to be active. The majority of them, and it's been challenging for me to really delineate which are my active investors, which are my passive investors, and how do I target more of those passive investors, right? Because in the end, people do want to do JV deals. They do want to be active as a GP. So I can bring a smaller deal, but since I'm doing these larger deals, I need to have passive investors. I can't bring any other people on as active investors. And that's really what people have been wanting. That's what the conversation has been. Although I am, so that brings me to another, kind of route in life where I've been seeking accredited investors. Now, how I'm doing that is doing Facebook ads, Facebook posts, and boosting posts, and doing paid promotion, right? So I'm doing that for the past couple of weeks, along with cold texting. So I got a list scrubbed down of people that would fit the criteria for accredited investors, meaning they have X amount of income, right? And also that they subscribe to a real estate magazine, and I'm just texting them saying, hey, would you like to see this opportunity? And surprisingly, these savvy individuals, these high net worth individuals are actually, receptive to these texts, and they're saying, okay, yes, let's have a conversation, let's talk. And this is how I'm now kind of building my accredited investor database, although it's not going to pay off now, because as you guys know, you really have to know, like, and trust the operator prior to investing with them. But I think for future deals, this will benefit me greatly. Although there is a lot of work involved with it. I don't know if you guys want to get into it.
Well, geez, that would provide value to us and the listeners, I'm sure, which I love how you're doing I guess you can say maybe not all of the above, but you're reaching into other ways to do what you got to do to get you that outcome that you need. Ultimately, bringing in a certain amount of raised money on that 102 unit deal. So you're able to get that proof of concept so that deal operates as you guys know it's going to. And then for that next deal, you have proof of concept saying, hey, we turned the Columbus deal for a profit. The 102 unit in Louisville is operating as projected, and that's going to show more proof of concept. And then you're able to incorporate that into your social media and podcast and start attracting money. But the one thing that just caught my attention, you're using a direct to seller technique to attract accredited investors. And you don't see that useful on the 102 unit deal? You feel like you need to nurture that relationship further before you can get some committals there?
Yeah, so great points, right? Let me backtrack a little bit, because how much proof of concept do I need for people to finally begin saying, wow, Nico's really doing something good. He's doing things right. I would like to invest with him, right? 2-3 deals, maybe even another deal after that. And even this whole process of going through creating a webinar, creating the marketing package, talking to investors. I think I need more practice doing this. I'm getting my reps in. So I might need another one before I would consider, doing my own deal and managing, being the lead sponsor on my own deal. But another question for another day, right? So yeah, I started doing a direct to seller tactic this entire past week, and it's been quite successful in the sense that people have been receptive to it. So I had 300 texts sent out a day, and I had a cold caller calling from 8 in the morning to 5 p.m. So I was hitting them from both angles. And if they were somewhat interested, I would have my cold caller reach out to them and book a time to talk with me. And it's just, just something that I wanted to try out to see how I can reach more people aside from the Facebook ads, aside from me calling every single person in the Make It Happen Mastermind and every single person that I could in Jake and Gino, just trying to reach more people. And I realized that over the past year, I should have been doing this more so that I wouldn't have to scramble here at the end to really make this happen. This is something that needs to be, and people need to know this, you need to be constantly talking specifics about, will you invest in a deal passively? How much will you invest in a deal passively? When are you looking to place your capital? What type of deal excites you, etc.? Because the deal that I'm doing now in Louisville is different from the one that we did in Columbus, and not everybody's interested in this one, and not everybody was interested in the one in Columbus, but there's a different appetite of investor out there that would be interested in different types of properties. So
That was
interesting.
so good, being specific and direct and putting it out there for everyone to know what you're looking for. When I heard you talking about your marketing techniques, I'm just thinking this guy's a true entrepreneur. You do what comes naturally, you do it well, and then you find some struggling points and you circle back and you find a new way to approach that. And you start to master that technique and you just get better and better and you make it happen. You do what you have to do. Moving forward, where do you see your business in 3, 5 years? What's your plan?
Yeah, man, great question. So what I did was I originally started off focusing exclusively on one market, on Tampa. And I thought that that was my superpower, that I was so ingrained looking in Tampa and I knew everything about Tampa. But I found an issue, a serious flaw in my super suit, you could say, in the sense that I didn't live there. Yes, I visited, but I was at a severe disadvantage from people that lived there, that could take brokers out to lunch, that could take brokers to have coffee, that could just, schmooze with their spouses, let's say. I found myself at a huge disadvantage. No matter how much I studied and learned about the market, I needed to be there to really have that advantage. So what I did was I said, let me think of a different tactic, and let's focus on this new tactic for the next year and see where it takes us. So in Tampa, I have a team, and then I took this same concept to two other markets that I'll tell you about in a second. But in Tampa, here's what happens: I have a boots on the ground guy that is going to be doing everything that I can't do. Schmoozing the brokers, making sure they're in constant contact with the brokers, making sure they're schmoozing with their spouses, their family, making sure they're providing gifts and always constantly in their face so that they can get access to deals that maybe I couldn't, being a long distance investor. So the boots on the ground partner is there. I have my guy, Luis Villar, who's our underwriter. Yes, I underwrite. I know how to underwrite very well, but what's my highest and best use of time? Not underwriting. Luis is good at that. So what we do is we get all of our deals filtered through Luis, and he takes a first look at them. And if there's something that deserves a deeper look, we will all as a team look at them. I have Shane Deckert, who's also on our team, and he is doing he will be doing project management. He is an engineer for the government, and he oversees construction projects all the time. That's what he does for a living. So he's going to be overseeing our construction. Right now, he also has great relationships with different lawyers, different legal entities, and forming entities and things like that. So he's going to be handling that side of things and insurance. And then I have Jake Oreskovich, who's in the Jake and Gino community and the Make It Happen Mastermind, who does our direct to seller campaigns. And he targets, so I come up with a list that I provide him with. I have about 1,000 people in the Central Florida area at this point. And what Jake does is he goes direct to seller via text, phone calls. We didn't do mailers yet, but we're going to incorporate mailers. And he has a special landing page set up to kind of help people, through the process as well. So when people go to a landing page, they sign up for our newsletter, et cetera, and they also provide certain details and data that will help us kind of find a deal that works best for them, or a way to reach out to them and acquire a deal from them. So it's kind of like the landing page acts as like a soft way to kind of introduce people into our business and what we do and how we buy things, because not all mom and pop investors are ready to talk to somebody on the phone. It's kind of scary for them. Although ideally the first step will be to talk to somebody on the phone. But we provide 2 avenues. They can go to the landing page and kind of provide some information for us to look at further, or they can jump on a call with us. So we get deals from direct to seller from Jake. We get deals from the brokers, from me and the list that I have, but also from our guy, Bob Carlson, who's down there. And they all filter through Luis. Then Shane and I take a look at them and we pop in offers. We haven't landed anything yet, but this is the strategy. Now, here's where the other markets come in. I found somebody who is boots on the ground with excellent skills in direct to broker relations and networking with brokers and networking with property managers, who lives in Birmingham. So Grant Poirier, he is in Birmingham. He's our boots on the ground guy there. And we have the same team, right? I'm far away. Luis is far away. Shane is far away. Jake is far away, but Grant is there. And Grant has the connections with every single deal that comes onto market, as well as pocket listings, because he has such great relationships with the broker. So what we did is we're also taking the same tactic, right? So Jake is going to be doing the cold texting, cold calling, and the landing page for Birmingham. Filter everything from Jake's leads and Grant's leads, get all filtered through Luis. We all then take a look at it afterwards when Luis thinks something is worth a deeper look, and then we pop in an offer. Now we're doing the same exact thing in Tampa, Birmingham, and we're bringing it to Cleveland. Jake Oreskovich just moved to Cleveland at the end of September. We're now in mid-October-ish, and he just moved there, and he's now our boots on the ground guy there, who's beginning all the broker relations there. So where I was lacking before was being the person in the market, being able to drive to a property quickly, being able to know the area like the back of my hand. But now I have specific guys designated for that, which is going to be huge, I feel. Back to your original question, and we're taking the same tactics there with the off markets. Everything's going to pass through Luis, and then we're going to take another look at it and maybe pop in an offer. Each market is obviously very different. The Cleveland market we're seeing a lot of success with smaller deals, which would be, not a syndication. We would do them as a JV. Birmingham, we're seeing more of syndication deals come through, although Grant is finding everything. This guy's is a rock star. And in Tampa, it's just been insane, man. What we're really trying to be careful about in Tampa is, the flood zones, because and the new FEMA map drawings and stuff like that, because we could be hit very hard and be screwed moving forward. But the idea 3 to 5 years from now is I'm hoping in 2022 to get my own deal, either as a JV, which I think can certainly happen, or a small syndication I want to run it, because I feel like I have the marketing machine down. I feel like I'm getting better at webinars. I'm feeling I'm getting better at putting together marketing packages. I feel like that's going to be my strong suit, and investor relations moving forward are going to have to get a little bit beefier. So yes, I want to be out. I want to be done with my teaching career. 3 to 5 years from now, absolutely. I want to be full-time real estate and focusing exclusively, bringing my teams to different markets and really just taking down.
Well, I think that is inevitable at this point. You have gotten me excited just listening to that answer, because what it tells me is you're very passionate about the plan that you and your partners have orchestrated, and you've learned from your trials and tribulations from the past 2 years, and now you know exactly the team, exactly the roles that need to be set up to get you that outcome that you need. So I love the team members. I know, several of them, and you're using those skill sets from each, because you being that social media podcaster, and then Jake being that direct to seller, Luis being the underwriter, and putting those components together, it's inevitable, that you guys are going to find that deal, as long as you're getting into, something that is a great deal. What I do want to ask you about, because I've been a loyal listener of your podcast, that's been fantastic. And the one big point that comes to mind is, how you've attracted certain podcast guests, because they're all high quality guests. But at this point, Are you trying to target potential guests that are passive or potential passive investors where you're able to nurture that relationship so you can convert them as LPs on your next deal?
So, a great question. Yes and no. I went through. I began the podcast just trying to talk to industry leaders, right? And that's how I started. And obviously, I started small. I started with people that I already had a relationship with, and that was helpful for me as I got my feet wet in the podcasting world. And then I expanded to people that I didn't necessarily know that were also thought leaders and industry leaders and doing big things in the industry. And then I realized there came a point that I realized that I wasn't necessarily being specific enough with who I targeted. So I searched out and tried to get on more uh, passive investors onto my podcast. And I had Randy Langendorfer on, and I had Jim Pfeiffer. And Jim is a great guy who runs a passive investing group in Columbus, Ohio. And I really wanted to tap into people like that. How do I find more people like that? People that can talk to my audience with the benefits of passive investing, how they've successfully exited their careers and now are exclusively passive investing. And that was my focus for a little while, but I think I failed, Bill. I didn't find enough people like that. And maybe it's a limiting belief that I had. I'm sure that they're out there, but I gave up too quickly on that. After Randy Langendorfer and Jim Pfeiffer, I kind of stopped. I stopped focusing on finding exclusively passive investors. Well, Randy's not only exclusive, but he has a majority of his portfolio passive. And Jim is exclusively passive. So I gave up on that. And that's where I feel like I failed. But I think about it often of how I can continue to find people that can talk to an audience from a passive perspective and how it's so powerful and how they've been able to shift from their careers into passive investing. That's really what I should be doing, right? But I've been finding so many people reaching out to me, and I'm sure you're getting emails also of your next potential guest. And it's just kind of like the low hanging fruit, and I snag them and we jump on a podcast. So I don't have to, because there's so many aspects to our business that the low hanging fruit sometimes is so attractive that I just grab it. But I do need to switch, and I would love to switch to a more exclusive focus on passive investing.
As far as you saying you think you failed, from what I heard, I don't think that's true at all. You mentioned being a teacher and having that career, and I know from your social media that you're a Spanish teacher. Y quiero hablar contigo después del podcast. But how are you able to get into this real estate world with that full-time job? For anyone listening that wants to take that step but feels like they don't have the time or the money or just can't do it themselves, how are you able to pull that off?
Yeah, you might not be able to do it, right? It's not for everybody. I don't watch any TV. I quit TV, 5 years ago or so. I watch literally zero TV. If I'm in the car, if I am doing working out, I'm listening to audiobooks or podcasts and music if I need a break. But I don't watch TV. I don't, use like apps like other people do. I don't play games. I rarely go out and party unless it's something that's going to benefit me and my family, meaning my daughter. And I give everything that I can to her. Right. So your time is so valuable, especially when you're working a full-time job, that you have to. And I don't even drink. I don't drink because I need to be focused 100% of the time. I need to be on point. And if I'm drinking, that's, in my mind, that's a waste of my time. In my mind, if I wake up a little hungover, if I can't wake up at 5 in the morning like I wanted to because I had a beer the night before, that's a waste of my time, and I will not tolerate that. So that being said, you got to really use your time very wisely, especially if you're working a W-2. Now, my W-2 is demanding in the sense that it's only 10 months though, right? But it's demanding because I legally can't be doing anything else when I'm in the classroom, right? I have to be focused on my students 100% of the time. I can't be, on social media. I can't be doing anything but focusing on my students. Even if I leave the classroom, forget about it. I mean, there's a lawsuit right there. I can't leave the classroom. So I need to be focused doing that. But I make sure now that I'm 18 years into the business or into my career of teaching, I make sure I know exactly what I'm doing. I get in there and I focus 100%, get my classwork, my schoolwork done. My kids do great in school. And then the time in between classes, I rock and roll. I do everything I possibly can. I'm focused. I don't necessarily chit chat with people at work, unless it's going to be something about real estate. I don't necessarily have small talk with people. Even I don't make new friends. My new friends are all real estate related now, and everything that I do is focused on real estate. So I make sure that my time from school is utilized for school when I'm teaching, but in between those periods, I'm also doing real estate. Before school, I'm doing real estate. After school, I schedule my entire day to do real estate. Sometimes it takes me past 10 p.m. at night, and that's okay. Sometimes I'm up at 5 a.m. doing real estate stuff, and in my mind, that's okay. If that's not okay with you, long term, meaning you're going to have to do this for a few years, if that's not okay with you, maybe passive investing is the way to go. And this is a huge point to nail home, because I've seen people land a deal or two as a JV, or even try to do a syndication, but then realize that it's just overwhelming and maybe not what they want, because you're getting similar returns as a passive investor. So what's the point of doing it on your own, especially if you're working full time? It might be too much. And if you have a family, it just might be too much. If you have hobbies, it might be too much for you. I highly recommend passive investing. Now, if you do begin as a passive investor, it can, and you have a good relationship with the operator, you can learn a little bit and see maybe this is something you do want to do. In that case, you're going to need to set aside a lot of time every single day for the next few years to make this happen if you ultimately want to transition out of your career. I also joined the 2 groups, which has been extremely beneficial. So the Jake and Gino community has been huge. The mentorship program has been huge. The Make It Happen Mastermind has been huge. Without those 2 groups, it probably would have taken me longer, right? So I'm projecting to be out of teaching in the next 5 years, but maybe it would take me 10 years if I was doing it on my own, because there's so many things that I run by my coach on a weekly basis that I wouldn't have access to if I hadn't joined in this.
Amazing, amazing. You have the recipe for success. You're doing all the right things, once again, to bring you to that inevitable reaching your final outcome. And, that's how I look at a lot of the stuff that we do, is just having that plan. We're looking to find that next big deal, or the next 2 or 3 big deals over the next year. Got that list of action items to make that possible. And what we really focus on is that why. How are we going to make that outcome possible based on our actions, and that big why? Is your daughter that big why?
It is. And, it's so easy to say, oh, I do this for my daughter, but what does that really mean? And it's solidifying more and more in my head as we move forward. So what that really means is, for me now, is I want to be able to provide my daughter with what's possible. What can we do in this world? We can do anything we want to do. Do you want to get out of your career? Okay, let me show my daughter how to do it. Do you want to utilize businesses, buy real estate to fund the rest of your life and your hobbies? Then let's show her how to do it. And ultimately, I want my daughter not necessarily to walk away with millions of dollars or owning buildings when I pass. I want her to walk away with the skill set necessary to create her own life. And I want her to take those skills, and I want her to be able to teach her kids the same. And I want her kids to teach their kids the same. And it's not about me providing my daughter with any material objects. It's about providing her with the tools she needs to teach her kids, to teach their kids, to create beautiful lives for those themselves and those around them.
Fantastic. That sounds like the answer, your last question of your podcast, how you want to be remembered. Is that the answer to that question?
It's I think about that question for myself, and I'm like, I don't know how I would answer it.
I love it.
But that is it. That's really
beautiful.
That's it. Yeah.
Going back, Nico, knowing that you went to SUNY Albany, and that's where Stephen and I reside, in that capital region of New York. We just found out the city of Albany was voted the best place to live in the state of New York. And I know that you have familiarity with Albany and Saratoga. do you have any interest, with that said, and potentially looking at any type of a New York, a capital region deal?
I do. Of course I do. So what it's funny, when I was in college, I think I might have mentioned this to you. When I was in college and I went to school for business, marketing, management with a minor in economics. And then after college, I switched to, Spanish literature, which whatever. I was trying to be like a romantic or something. Anyway, one of my professors asked me what I wanted to do. And I said, look, I want to flip houses. I want to buy houses. I have a great friend who's he's in construction. He's got his own company. We can flip houses here. I want to buy these houses that I'm living in, basically what you did. And he advised me against it. He's like, oh, it's really hard and this and that. And then he said, but Saratoga is like the fastest growing county in the United States or something like that. And I said, really? I said, that's pretty cool, man. So just a tidbit of information. And that I used to go to Saratoga every summer to work at the racetrack. So it sparked an interest and a love in that area for me. And yes, I would consider investing there.
Well, we call it Small Albany around here. So I'm sure you know the city rather well.
Yep. Yeah, some good times awesome. Back then.
Go ahead, Steven.
I was saying, were you originally from this area, and how did you relocate down to Tampa? What brought you down to the Florida area?
You see, this is funny, man. So I live in New York. I was born and raised in Long Beach, New York, and I went to school at SUNY Albany. But I didn't stay there, just lived there for for those 4 years. And I've never lived in Tampa. I just have friends and family down there. And Tampa was my original target market, because after having a first conversation with Gino, he was like, well, where are you going next? And I said, Tampa. And he said, that's your market. And that was really it. But it's funny that you think that I might be from Tampa. If you look at my LinkedIn account or something, I think I had something like from Tampa or something that I needed to change. I thought I might have recently changed it, but I was known as the Tampa guy. And that's how the people in Jake and Gino found me, my current partners on the Columbus deal. They were like, I want to invest in Tampa. Let me find out who's investing there. And I was the Tampa guy, although I never closed the deal.
At first I thought you lived there, and then I would see the surfing posts and I was like, where is he surfing in the bay?
Yeah. So I live in Long Beach, New York, which is right on a beach. I've been, surfing here forever for the past 30 years. And
let me guess,
it's a good area. Yeah.
Your other residents in Nicaragua, I know you go there to surf. The surfing in Nicaragua has got to be much better than Long Beach.
It is. It's a lot better. Oh man, it's beautiful over there. But I literally haven't been there in 5 years, surprisingly. So they had some issues with their government, and there was like some protests and some people died. So then the United States, although prior to that it was considered the safest country in Central America, now the United States was like, what they put like a warning on traveling there. So I haven't been there in 5 years. My daughter has never been there. So I would like to go back, and I finally just rented it out. This past weekend was the first time I rented that house as an Airbnb. Somebody just signed the lease for the next 3 months and possibly 6 months, and hopefully they're gonna buy it. We'll see how that turns out. But I have it up for sale also.
Oh, right, fantastic! Now. We love looking at your hobbies and how you stay busy. One thing that I was thinking about last night as I was preparing for this podcast was, how does Nico do everything that he does, and realizing that no TV, no wasted time, makes that possible. So with that said, we want to be respectful of your time. We know you're a busy guy, and you probably have some partners to talk to. So we like to end the Collecting Real Estate podcast with a collection of real estate questions for you. Number one, what is your 1 to 2 year business goal?
It's 1 to 2 year business goal for the next 1 year. Rather, I want to be able to raise $1 million is number one, and then number two, I want to sponsor my own deal. I want to be the lead sponsor on a deal as a syndication, either in Tampa, Perfect. Birmingham, or Cleveland.
Number two, 1 to 2 year personal goal.
Personal goal, I would love to be able to create a program in the school that I work at that teaches financial literacy and financial intelligence. I began the thought process a couple of years ago, and then COVID hit, and I ended up I was working on another program that I started, which was meditation, exercise, and character development. But that stopped also when COVID hit. And now I want to revisit the whole thing and add in
Wow,
a
that's
financial
fantastic.
literacy piece.
Very, very valuable. Number 3, how can Steve and I or the listeners assist you, and how do we contact you?
Excellent question. I would love to be assisted in a variety of ways. First of all, assisting me is as simple as calling me and connecting with me so we could see if we could provide value to one another. I love hopping on calls. I'm on networking calls all day now, and I should be doing it the rest of forever because they're so important. And you learn so much, and I really enjoy them. I enjoy learning about people. So helping me would just be jumping on a call with me where we can figure out what I can do for you, what you can do for me. So to reach out to me, I recommend people go to my website, which is www.smallactscommunities.com.
Beautiful. And I know that Stephen and I do have a lot in common with you. There's a lot that Stephen didn't even get to discuss, some commonalities that he had. You know, he lived in Tampa for 6 years, and you know, he knows the Spanish language rather well. He has his own experiences that are pretty cool. And, you know, we've been part of the same communities, same mastermind over the past 6 months or a year, and have gotten to know each other much, much better, which I do value immensely. So if anybody in the audience appreciated this episode, please give us a 5-star review, subscribe to the Collecting Real Estate podcast, and thank you once again, Nico, for being a fantastic guest.
Thanks, Bill. Thanks, Steve.